Hi, welcome to the Market Alert for Friday, the 27th of January 2017. So yesterday, the market opened. We had a losing trade followed by a winning trade, and at 3:30 I sent out a note to say the market is going to consolidate, as I'd said in the previous day's Market Alert after taking out the 20,000. That's what markets do. When they take out major psychological levels, they become sideways. So I warned that we could go into the sideways move, one in the bigger picture, and two yesterday. You could see the market was going nowhere after the first hour, and it remained that way until the end of the session, and you can see there's not a lot happening now. The first week after Trump's inauguration, the euphoria is wearing off. They've got through the 20,000, and now we're running out of news from the Trump camp. The only thing that hasn't happened yet, I don't think they've appointed a new Treasury of the Secretary, so it'll be interesting to see who's going to get that job. They may have done, but again, there is still no news of any Fed announcements. And again, today we can see that all we've got is the revised consumer sentiment at 3 p.m. So no sign of Yellen or anything else. The market's going up on fresh air. It's not only going up on fresh air on tick volume, but also if you look at the real volume as well. This is for the previous day. As I said yesterday, when you're using real volumes, they're held back by a day. You can see the market gapped above the 20,000 and then traded up. It's on low volume. Why is it on low volume? Well, there's two reasons behind that. One, it was able to move because of a lack of selling, low volume, and also the big boys have done their selling, which we've seen over the last few weeks. So we've also been confirmed with the article on Zero Hedge that they've been selling hundreds of millions of dollars of bank stocks, and the low volume again is indicative of the general public coming in and buying the market's euphoria, moving prices higher. What they don't realise is that the leverage at these levels is stacked against them. If the market was at 1,000 and it went to 2,000, that's great, but to get 100% return even over the next 2 or 3 years is going to see, or have to see, some serious move, and that's not going to happen with the markets. There's no way the elite are going to allow that to happen, and not only that, but they've all been selling. That's why you get major corrections, so the big boys can come back in, buy from the weak holders, and then move the market back to the upside again. This is also confirmed by the implied volatility as well. 891, this is the August low now, 19th of August this happened. We've moved lower. We haven't seen this for a long time. We all know what happened in August. We saw the markets go into a correction. It wasn't a major one, but the market moved sideways to lower. Let me just show you that in the chart. We come back to August here. This is the August the 15th, and you can see from this high, as we're waiting for the US elections, the market came down around 800 points, 772 points there, and then remained down until obviously we had the elections. Just before the elections, the market down 790, 800 points. Not a big correction by the size of the market, but we know it was being rigged at the time. But nonetheless, that cue from the implied volatility down at 891 is indicative of a correction. This time it will be completely different. It will be a far bigger correction. It won't be just a few hundred points off, because we've now got Trump. If you look at the fundamentals, Trump's already in. He's signing executive order after executive order. He's done a huge amount in the first week. The problem is he's not going to get any results that quickly from what he's done at the moment. Again, it's this euphoric move that, or a euphoria that's moving the market. But once that dies down and the implied volatilities are this low, there's no way that the market is going higher, because it's just not the way that it works. This is the way it's worked since I uncovered this in 1994. You get down to these multi-year lows in implied volatility, you get a major move in the underlying market. And there's nothing to really hold the market at these levels. When is it going to do it? That's the only thing that you'll never be able to work out, because anything can come along and rain on the party, as it were. But the key thing is here that you have the warning signs. Also on yesterday, the doomsday clock advanced 2.5 minutes to midnight, and Trump blamed which is interesting. An interesting video there as well, well worth a watch. US stocks are now most overpriced since the 2000 crash. Trump and Yellen on collision course. Told you they don't like each other. I'm assuming this meme here shows that this is Trump and this is Yellen. So there's a lot to come that's negative for the market. But again, it's the timing until they meet, till we get through the second week, who knows. But expect a bit of a consolidation phase just in case the big boys have got to sell off a few more stocks as well in these bursts to the upside. Right, that's it for today. Watch for the market being sideways. Again, this consolidation phase does come after you break a major psychological level. Right, that's it. I will see you in Monday's Market Alert. Have a great weekend, and as ever, thanks for watching. See you in the next one.